Hope everyone's doing well and had a good day. This is the Emini review for Thursday, May 23rd, 2024. And it was a pretty interesting day. I think I mentioned on the weekly chart earlier that we're forming a high one on a higher time frame. And we'll go ahead and start with the daily chart. I mentioned yesterday that the market was in a tight trading range on the daily chart. And we're in an overall trading range here. So when the market's this far from the moving average and we start getting overlapping bars and small bodies, big tails, we're in a trading range. And you have to ask yourself, you can think about it this way. Traders are willing to pay this far above the average price. So they should be, what they want to see is above average bullishness. And you have to ask yourself whether this has been an above average bullishness or if it's really just average price action. We're going sideways. The market's in a trading range. So I thought more likely we would have to come back and test the moving average before long. And on the daily chart, we have a high 2 buy signal above yesterday, the 22nd. And it had a bear body. And because of the context that I just mentioned, I thought there would be sellers above yesterday's high. Let me just draw yesterday's high and yesterday's low. And you'll notice I drew this too. I wanted to add that we had this parabolic rally into the close of yesterday and then the gap up to the open of today. And when you have a wedge that's parabolic like this, you can see the highs are getting steeper and steeper. That is unsustainable behavior. And what's going to happen eventually, you have trading range price action to the left. Eventually the bulls are going to get exhausted and they're going to look to take profits. This is not how bull trends behave. This is more trading range behavior. Buy climaxes getting vacuumed up to resistance. And with that, we'll go ahead and start the review. So bar 1, we gapped up above yesterday's high. And again, because of the daily chart context, I thought we'd have sellers above. And then we had the big bear trend bar on bar 1. What about selling below bar 1? Some traders can. I think it's aggressive. And again, we have that stat where about 20% of the time, bar 1 will remain the high or the low of the day. And that's with no context. So in this context, maybe you have a 30% chance, maybe it's slightly higher. But most of the time you go sideways on the open and it's less likely going to be a trend from the open. So it's aggressive, but it's an okay sell below bar 1. Betting that we'll fall more into yesterday's range. And then bar 2 was disappointment. It was a doji after a trend bar. Traders who sold bar 1 are probably disappointed with bar 2, but you have to ask, are bulls willing to buy up here? We're so far above the average price and we're getting a huge bear trend bar and then a bad high 1 signal. So the odds are the bulls are not willing to buy until we get a couple of legs sideways to down. 3, we have another high 1 signal bar. It's another doji. Broke out to the downside and failed. Probably sellers above. And this was strong enough that any pullback will likely lead to a second leg down. And then bar 4, we broke out again as you can see we stalled at yesterday's high for a couple of bars and then we sold off on bar 4. Bar 4 had a shaved top, which means it did not have a tail on top. So traders were so eager to sell above and on the close of bar 3 that it looks like we also had a tick gap. The closing price here was 45.25 and the open here was 45. So we had a 1 tick gap from the close of bar 3 to the open of bar 4. And that's a sign of urgency. Bars 1 through 4 are also in a micro channel. And we know that's one big breakout on a higher time frame. So we could have one big leg down and then a more complex pullback and then a second leg. But on this time frame, we have leg one, pause, leg two, and then more selling on bar five. Becoming climactic on bar five, the bar is getting bigger. We had a tail below 4, tail below 5. And look where we are. We are right back to the middle of the trading range from yesterday. The bulls have a bull trend line here. And because of the strength of the sell-off, I'm not sure it's wise to just be buying the close or buying below bar 5. But it's not unreasonable to expect a bounce here, to expect bears to take profits, and some aggressive bulls might start buying, betting that this sell-off is one of those 50% that go the wrong way, and then we rally. But again, the daily chart context suggests that that is unlikely, and what's happening is actually not that unexpected. So what do you do here? Probably sellers above. You know we're in a trading range when you look to the left. And a common place traders like to sell after a sell-off like this in a trading range is the 50% pullback level. So I'll draw that 50% level here. And then I'll erase this. And we'll just keep that there for later and see what happens. Inside bar 6, small bar, it's profit taking. It's not bulls aggressively buying, but we are bouncing on that trend line that I drew. Probably going more sideways here and not straight up. And then we went sideways on bar 7. It's an outside bar. It's more of a bullish outside bar because it broke out further to the upside above bar 6. It's an expanding triangle on a smaller time frame chart, and the odds are we'll probably find buyers below 7 and sellers above. Inside bar 8, so we have an IOI pattern. 6 is inside of 7, and 8 is inside of 7. So inside, outside, inside pattern. That means it's breakout mode. It's a trading range. The market's trying to find the next direction. Now, this pullback probably is not enough to correct this. So what I mean by that is I expect a deeper pullback. I don't feel urgency to get short during this sell-off. And the reason I don't is because of the trading range price action from yesterday. We have a lot of bars overlapping each other. We have a couple of sell climaxes during this sell-off. So bar 1 was a good trend bar, but then we had a couple dojis. And then 4 and 5 were parabolic with tails below. And the context, if this was below yesterday's low, maybe I'd be looking to sell with more urgency on a more shallow pullback. But because of all the context, I would prefer to sell higher, like at this 50% pullback. So I do think we're going a little higher, but I think the upside is limited, and I think the sell-off down to bar 5 will get a second leg. Bar 9, bull breakout. But you have to ask, what is it breaking out of? You are still completely inside the bar 5 range. So this is breaking out above the past 3 bars, but the past 3 bars were a trading range. So if you're buying here, you're possibly buying high in a trading range. There are going to be sellers above bar 5 and probably sellers at the 50% pullback. So we might go a little higher, and this might have been a strong enough rally for its own second leg. But again, I think the upside here is limited. Bar 10, what happened on bar 10? You had bears who are selling here, there's a stop above bar 5, and bears are going to sell to prevent that stop from getting run. Plus, like I said, we have a trading range in these 3 bars and then a bull breakout. The bulls probably needed one more bar, at least. And whenever traders need one more bar, the opposite side knows that, and they'll sell the close, betting that they won't get it. Now that's a scalp, so I do think bar 10 is a bad low 1 with buyers below. You also have support from the moving average and buyers down here in this trading range. The bears who sold down here, disappointed. This is a big low 1. Bar 11, we fell down to this trading range, the bottom of the trading range. We tested the bar 5 close. where sell the close bears got trapped. So what do you think bears are going to do when they sell bar 5? This is their follow through and they get a chance to exit at break even. They'll probably take that chance to exit and look to sell higher. So as far as selling here, I would not. And that's why bar 12 reversed up the way it did. Now bar 12 closed on its high. We have a possible double bottom, low of the day, and possible swing of the day. Again, the problem I have with that trade is the daily chart context. I was expecting sellers above yesterday's high, and even if we get there again, I expect that to be resistance. And as far as have we seen the high or the low of the day, by bar 12, there's a 50% chance we've seen either the high or the low. And of course, at this point, it's more likely we've seen the high. And it could be one of those rare days where bar 1 remains the high or the low. So bar 12, I think bears need to get out above bar 12. It's an always in flip. We're on this bull trend line. It's a bull bar closing on its high. It's a second reversal up. The bulls at a minimum are hoping we get a breakout above bar 10, the neckline of the double bottom, and a measured move up to here. And the bears are hoping we go a little higher, maybe the 50% pullback, and they get a chance to sell basically at a discount and then catch a second leg down. So leg 1, maybe complex pullback, and then leg 2. 13 disappointed bulls who bought above and bears who exited above. Looks like they got trapped out. But the reality is this is a trading range. All the bars since bar 6 were overlapping and the range is really compressing. It's a triangle. 50-50 breakout direction and 50% chance the first breakout direction is the wrong way and then we reverse. We're getting a bull breakout of the triangle. It's a good looking bull bar, 14, but the bulls need follow through. And then they don't get it on 15. So what about selling 15? 15 is forcing you, if you sell on a stop below, it's forcing you to sell in the middle of a tight trading range. That's never ideal. Plus you're on the bull trend line, which is support, and you're at the moving average. The market's really deciding here. Are we going to get the reversal up or continue down? And until it's more clear, it might be better to wait. It's a limit order market, and that just means there are basically buyers below bars and sellers above bars. 16, the bears got follow through, but you can see this is the first bar poking below the bull trend line. So this might be the first breakout, and then they need follow through. And if this was a strong bear breakout, why was 16 smaller than bar 15? So you have to wonder and be a little suspicious because we're still in this tight trading range. Every time it's bullish, they sell it, and when it's bearish, they buy it. Bull bar, they sold a couple bear bars, follow through for the bears, and that's good, but we're still not below the low of the day, and I suspect there are buyers below bar 5. Bears, looks like a decent sell-off, probably strong enough for a second leg, but you also have to wonder if it's leg 1, pullback, leg 2, and then a double bottom for the bulls. More selling for the bears. It looks like the bears are getting their second leg down. Leg 1, pullback, leg 2. 4-bar micro channel and all good bars for the bears. Bear bars closing on their lows with little overlap. The odds are this will get a second leg of its own. And by bar 18, there's an 80% chance we've seen the high or the low of the day. And of course, at this point, the odds are probably 70% that we've seen the high of the day. That doesn't mean the more bars that get added, it just gets higher and higher. Like if we come all the way back up here, the odds might be 50-50. And then bull bar 19. So the bears got a breakout below bar 5, but just one bar. They needed follow through and they don't get it. Remember what I said, whenever they need one more bar, the opposite traders will take the buy, betting that they will not get it. And that's why we bounced on 19. 19 was a strong enough surprise that the low one will probably fail. Any bear who sold 18 is disappointed and they'll use any bounce to get out. Bulls are scalping here, so I wouldn't be surprised if we test down and then reverse up higher. But instead, 20 broke out to the upside. It's a big bar, What we might have had here is we had this triangle. We got the bear breakout. And I said 50% chance the first breakout's the wrong way. So here's the bear breakout. Maybe it was the wrong way. And then the bulls get some sort of measured move up. But traders are also wondering, maybe it's an expanding triangle. We have a low, a lower low, high, higher high, and maybe going to make an even higher high here. But strong pair of bull bars, probably going at least a little higher, and probably going to get a second leg. 21's a pause bar. It's a bad low one, probably buyers below, but the buyers may not come in until breakout points like the bar 19 high or the bar 18 high. We are in a trading range, and gaps in trading ranges close, so I would expect the gap that the bulls created with bars 19 and 20 above bar 18 to close. So I'll draw that line here, and I will make yesterday's high and low blue. And I'll just add one more thing, 50% pullback. Probably sellers above, but probably going a little higher because this was strong enough for a second leg. The low one triggered on 22, but the odds were there were buyers below 21, and now we're getting support at the moving average. 20 did break strongly through the moving average, so traders who sold the moving average got trapped, and they were going to use this bounce to exit. That's why bar 23 turned up, and now 23 is an inside bar, lowers the probability, but it's a high one after a decent rally. The problem the bulls have is it looks like we're high in a trading range, so anyone who's buying here knows they're taking a chance. They know that the market really needs to rally strongly, and if we get hesitation and the market starts to pull back, they'll probably be quick to exit their longs. 24 is small bull bar, triggering the high one. It's a bad second reversal for the bears, so probably buyers below 24, but there's not that much urgency to the upside here. The past 4 bars went sideways and were high in the trading range. More buying on 25. What I think is happening here is this was strong enough for a second leg, and the bulls know that and the bears know that, so the bears are going to wait for that second leg to sell. If they're lucky, maybe they get the 50% pullback here. Maybe they're selling above these highs here. And the bulls, they'll buy until the bears create a sell setup. And if they're lucky, we'll just get a bull reversal, low of the day, bar 18 reversal, and then a rally back up to the high. Bull breakout 26, but it's the first bar breaking out of all these bars, so the bulls need follow through. And traders will wait to see what the follow through looks like. This rally could be stronger for the bulls. The bars are small, there's overlap, small bodies. The context is bad, possibly a second leg trap in a trading range. And this is the defining factor, like the defining characteristic of the day. So the bulls right now still need to do more. And then the bulls do not get follow through on bar 27, and that's a problem. 27 is a high one, probably sellers above, and you combine that with the 50% pullback. There's a gap with the bar 3 low. So for a couple of reasons, I suspect there are sellers above and that the upside is limited. Inside bar 28 looks like an II pattern, possible final flag, which means we might get the bull breakout but then reverse and then come all the way back down. Bull breakout 29, you can see there's a tail on the bar, and we could not close above the 50% pullback from the bear sell-off from bar 1 to bar 5. Possible 3 legs up, 1, pullback 2, pullback 3. But where's the sell signal bar for the bears? Since bar 19, the bears really have not had enough selling pressure. Now what the bears have going for them is that this is a trading range. This was a strong enough breakout that it was expected to get some sort of pullback and then a second leg, and the market did the lower probability thing. And this is a surprise. And again, I think we will get back down to at least the bar 18 high. The bears who sold down here scaled in higher. There's a 60% chance they'll be able to exit at their original entry, and an 80% chance that if they sell below really any bar, but say that they sell below a bear bar, the odds are they'll be able to exit. Say they sold at the 50% pullback, 80% chance they'll exit at their average price, which is here. And then bar 30, the bears get a sell signal. You can call it a high 3. You can call it a low 3. 3 pushes up and the bear bar closing on its low. The bulls tried twice now to break out above this 50% pullback, and they failed. And more traders might give up, believing that we're in a trading range, we're high in the range, and gaps close in trading ranges. So we could quickly fall down here. Bull bar 31, but who's going to buy above 31? Is 31 a strong high one early in the market cycle, early in a strong breakout? Or is it a high one after 3 legs up, high in a trading range? Obviously, there's probably more sellers above. And we could not get above it on 32, and instead, traders sold the close of 31, knowing it was a bad high one, and any trader who tried to sell above was actually greedy. And 32, it's a bear bar, closing below several bars to the left, but stalling at the moving average. But again, probably sellers above this bar as well. And 33, another bear bar, crossing the moving average, but tails below. Odds are we'll pull back, but there are probably sellers above. 34, bull bar. What about buying above 34? Betting leg 1, pull back, leg 2. Some traders might. You can say it's 2 legs down here from the bears, and we're getting a high 2 on the moving average. But the reality is, when you look at this, is the market in a bull trend or is it in a trading range? It's obviously in a trading range. And traders, if we're in a bull trend, traders will buy high 2s at the high of the range. But if we're in a trading range, traders will sell above high 2s. Now, they may not sell directly above 34. 34 might get a breakout back up to here. But even if we get up here, even if we get above 30, I suspect there are sellers above. 35, good entry bar for the bulls, but a couple of small bars. And they're completely overlapping the bars to the left. So bull breakout, but bull breakout of what? The past 2 bars. So the bulls really need to do more. This was strong enough for a second leg, and this could be the second leg. But the way I see it, the minimum requirement for the bulls here is bulls got trapped, maybe buying the close of 29, buying somewhere up here. And when they get this sell-off against them, this is another variation of a high 1 on a higher time frame. So the bulls get disappointed by this pullback, and then they get this rally as a gift to exit their losing trade. And then bears who missed this sell-off, we had a micro channel, the odds are we'll get sellers above and a second leg down. The bears who missed that, they'll get a chance to enter as well. Hard to sell against 3 consecutive bull bars, but the context is good to sell. 37, bear bar, so disappointing for the bulls. Was this strong enough for a second leg? It could have been, and we could get another leg for the bulls here, but the problem is that second leg could be as small as 1 bar. Probably sellers above 38. The problem with selling below 38 is you're selling against 3 consecutive bull bars, and it's a small signal bar. And the odds are, when you have a small signal bar, you know that your risk reward is good. You have small risk, and that automatically means your probability is bad. So the market might trigger your stop below 37 to enter short, only to reverse up, run your stop, and then reverse back down without you. It's very common to see that. We did not quite go outside down on the next bar, but you can see what happened. And I don't know if we went above, if we went up or down first, but we have a bear bar 38, another bear bar closing near its low, micro double top and double top with bar 30. For the bulls, I would get out of longs below bar 38, and for the bears, okay to short for a swing. And then 39 is a good entry bar. You can see traders selling below 38, probably a combination of bulls exiting longs and bears entering shorts. And then it's a solid entry bar. It's a trend bar, going a decent distance and closing below the moving average. The bulls are hoping it's just a double bottom with 33, but they're going to need to do more. They need more buying pressure because I'm not sure traders are looking to buy after a 3-bar micro channel with a strong bear bar and then another bar, 40. So the bears are getting the breakout. Where are we going to? Well, we might be closing the gap with bar 18. I also said it's possible we have an early high of the day, and that doesn't mean we have the low of the day, so we could also fall for some sort of measured move down. I am expecting support at yesterday's low. And then another bear bar, 41, probably sellers above, 5-bar micro channel, nothing to buy. The bulls, maybe they'll argue it's 2 legs down at support the bar 18 high where there's a gap. But the reality is it's a trading range and we have enough momentum down here. This probably resets the leg count. It's probably a leg 1 and we'll probably get to a new low of the day. 42, it's a implied low 1, closing on its low, probably sellers below. 43, the micro channel is continuing. We closed the gap from the bar 18 high. And the bulls, they're hoping we get a double bottom with bar 19. We get a low of the day, and then we rally into the close. The bears, they're hoping we get the downside breakout of the trading range. This was strong enough. This all might have been the first leg, and then this was a more complex pullback. Let me demonstrate what I'm talking about. On a higher time frame, bar 1 to bar 18 was all one leg, and here's the size of that leg. Then we had a pullback up to here, maybe around 50%, maybe starting with bar 30, maybe starting with bar 37, but either way, one target the bears are looking for is a leg 2 measured move to here. And I will draw that and then erase the extension so it's not distracting. So leg 2, stands for measured move. Can you buy here, betting that we're low in a trading range? I would not. It's enough momentum down. Like I said, we'll probably get a second leg, and the bulls have not had a bar since bar 36, so there's no buying pressure. Inside bar, doji 44. The bulls hoping final flag, but the reality is we're probably going lower. Outside up 45, but it's the first bull bar in about 10 bars. The odds are there are sellers above. This might have been a 2-bar trading range on a smaller time frame. Now we're getting a bull bar at the high of that trading range. And it's an outside bar, which means it's an expanding triangle. So as far as buying above 45, I would not. 45 might have been enough of a surprise for a second leg. But the second leg, this is a minor reversal. The second leg could be really small if it even gets one. And I think it's risky to be buying here. And then you can see what happened on 46. We went outside down. Traders in agreement. This is a trading range. We went high in the range. This is easier to see on a 1-minute chart. Maybe I'll demonstrate that actually. If I can switch this over. What time was it at? 1:20 Eastern time. And we look at the 1-minute chart at 1:20. We will see the expanding triangle. And you can see a couple legs up, a couple legs down here. Now the problem with buying here, betting that it's an expanding triangle, also more clearly seen on the 1 minute, but I don't want to use this as a distraction. You can see it on the 5 minute chart too. The bears are controlling bars. The bulls have had 1 bar in 10 bars. So as far as buying down here, arguing we're low in a trading range, I still think the bulls need more buying pressure. And then a doji 47. Do you really want to buy above 47? It's a doji after such a tight bear channel. You can argue it's 2 legs down in a trading range, but I still think the upside here is limited. Maybe we'll test the moving average, but I still think we are going lower, and we'll at least break out. I guess we did break out below 19, which I thought we would do at a minimum, and now the bears were looking at yesterday's low as a target. Bull bar 48, but probably profit taking. It's a minor reversal in a trading range here, probably sellers above. And then 49, triggering the low 1 below 48. You can see what's happening. The market's channeling down. So we had a bear spike, then a pullback, and then a channel. The bulls are hoping we get back up to the 45 close at a minimum to complete the trading range, complete the market cycle, maybe get a reversal up. And the bears are hoping we just continue channeling down, maybe even get a downside breakout. And that's what happened on 50. You can see we vacuumed down straight to the low of yesterday. And that's exactly where the bar stopped. 50, obviously a really strong bar. When you look at 50, is it a bar that you want to buy the close of, betting we're low in a trading range and that maybe it's 3 legs down? I don't know. For me, I would not. I think bar 50 is more likely a measuring gap. So maybe we get a measured move from the start of this leg to where the gap began, which is the 47 low, and we get down to here, which I'll draw and again delete. And I'll call it measuring gap. The reason I won't put MG is because MG for me stands for micro gap. So obviously several targets below here for the bears. For the bulls, really nothing to buy. You can see we had a deep pullback on 51, almost closing the gap, or almost testing the gap, I should say, but not quite getting there. So we have an open gap here, open gap from the 33 low to the right. So the bears have open gaps, and that's a warning. That's a sign of strength. And for the bulls, it's really dangerous if you're buying to be scaling in when there are open gaps. 51 falling. Looks like we're getting close to the leg 2 measured move. We'll get there at a minimum. Inside bar 52. Whenever the market gets close to a magnet, it often stalls and pulls back before getting there. In this case, we did get there without a pullback. There are implied pullbacks. The tails above are pullbacks on smaller time frames. But on this time frame, we have not had a bar trade above the prior bar since bar 48. So we have another 6-bar micro channel here. The odds are there are sellers above. This is a bear trend, and there is a lot of trading range price action. As we know, there's a trading range on the daily chart. But as far as buying in here, I would wait for a trendline break. 54 going lower. Tight bear channel, only look to sell. We are through the measuring gap, measured move. And the reality is it looks like we're going further. Now the bears can become exhausted. Do I think the bar will close on its low? I don't know. Most bars don't. And in the context that we're in with the trading range, I think the odds are that we will not. But that's not enough reason to buy here. Still plenty of time left in the day. And this is far too strong to be buying. Bull bar 55, so the bull's getting a bar, but the reality is it's profit taking around a a measured move. So what about buying above 56? It's a bull bar closing on its high. I would not. You can argue we're far from the moving average, and it's been about 20 bars, and we may rally to the moving average and test it, but I think it's too aggressive, and I would wait for a trendline break before buying. Sellers above on 57, and now 57 is a weak low one signal bar, possibly late in a trend. Probably buyers below. And instead 58, closing on its low, went outside down. But outside bars are trading range bars, and I think we'll probably look to go more sideways here. But if anything, I'm looking to sell and not buy. Getting more overlap with bar 59, testing the measuring gap once again. And the past few bars have overlapped. 55 to 59 are all overlapping in some way. But again, the reality, we have a bear breakout, pullback, and then a channel. And this is all too tight to be buying. The market's in a small pullback trend. And when the market is in a small pullback trend for the bears, when it's in a bear trend, your options are to be short or flat. You cannot buy and you cannot scale in to longs. 60, it's a low one with a bull signal bar. It's a bull body, but it's a sell reversal bar because it closed below its midpoint. Probably buyers below and going more sideways here. 61, it's a buy reversal bar, but a bear close. Probably in a small, tight trading range and going more sideways. 62, bull bar, but probably high in a trading range. You look to the left, you see tails where traders were selling before. I think the upside is limited, but we may test the moving average before long. Bear bar 63, you can call it a low 2 and a bear trend. You will have traders selling below 63, betting that we are in a bear trend, but we are still far from the moving average, and it's been over 20 bars now. And eventually the bears will become exhausted. This will become unsustainable, and we will have to go more toward the average price to find sellers. So you could argue we're low in a trading range here. There might be buyers below. 64, if you did buy below, you're disappointed with your entry bar. And then that's why 65 continued down. Anyone who bought just bailed out of the trade. Still a tight bear channel. Still hard to find a reason to buy here. 66, a doji. Disappointing, but not disappointing in the way that 19 and 20 were disappointing. It's just sideways in a tight bear channel. 67, now that was disappointing for the bears. Even though it closed back below its midpoint, 67 went far enough that if you sold down here, the market rallied all the way up here to, say, 82.25. It went several points above your entry. You know the odds are bears scaled in, and they'll look to exit below 67. And that's what happened on 68. We had a disappointing bar, became a low 1, and there were buyers below. So what about buying above 68? You will have traders buying above 68, betting we have a wedge bottom. We've been far from the moving average. We're going to bounce. And we may come back up to the start of the channel, which will become a trading range. And I think most traders should wait to buy, wait for a strong trendline break. I think it's too aggressive to be setting up along here. But that is the argument for the bulls. Another small doji, 69, buyers below. We're probably in a trading range here. And then bull bar, the price might be getting vacuumed up to resistance, and what it could be testing is the 62 close, the moving average. The reality is we're getting more and more overlap. This was a lot tighter than this, so we're probably in, this looks more like a couple legs down in a trading range, and we'll probably come back up here before long. 71 became a low to short setup. Bear bar closing on its low, but low in a trading range. You could say it's in a channel, and you will have bears selling, but not ideal. Plus, we're getting late in the day, and the market will do more low probability things later in the day. 72, if you sold below 71, you're disappointed with your entry bar. But 72 is also a bad buy setup. Probably buyers below and sellers above, going more sideways here. 73, breaking out to the upside, but still within the range of 71, probably sellers above. And then a small bar, 74. If 73 was a strong bull breakout, why is 74 a small follow-through bar? The bears, they'll say it's 3, pushes up, 1, 2, 3, wedge pullback to the moving average, probably sellers around here. And then we fell below 74 on 75. But this was strong enough for buyers below, and there were. But the second leg could be as small as 1 bar. I think the reality is we're going sideways here. 76, another buy signal bar, but a bear close below the moving average. The context is really bad for the bulls. Where's the significant trend line break? You can see we're going sideways here, and we did break the tight trend line, but the reality is bears will just redraw it in some way or another. And I think the best case for the bulls is we get up here to around the 57 high and create a trading range. 77, bull breakout, but is a trading range bar, so probably more sellers above. This was the start of the channel, spike, pullback channel. Channels evolve into trading ranges, and this is a trading range. 78, inside bar, probably sellers above. And then 79, an inside bar, so inside pattern, breakout mode. We're simply in a trading range, and it's so late in the day, probably not worth doing anything, but probably sellers above. And then bar 80, traded above, but probably sellers above. And then sideways into the close. For always in today, I thought it was always in short below bar 1. And I'm not sure we ever became always in long from bar 6 to bar 14. I thought it was still always in short in here, but because of all the trading range price action, I would probably also just call it a trading range and look to buy low and sell high. I thought bar 19 was a bar you need to respect, and if you're short, get out of shorts above bar 19, possibly an always in flip, and then 20 might have flipped the market to always in long, but you're still in a trading range, so buy low, sell high. So when you're long up here, you're possibly long high in a trading range, and your equation's bad. The odds are we're not going to get the breakout, and we'll fall back into the range. Gaps will close. I thought bar 37 or 38, and certainly by 39 or 40, we were always in short. Again, these bars here are bars that traders need to respect as respectable stop order entries, and you'll have bears, swing traders selling below, and you'll have bulls exiting longs below. And all through here, of course, always in short, and I'm not sure we ever flipped to always in long later in the day, but around here, it probably became buy low, sell high. And for stop orders today, you could sell below bar 1. Some traders might sell below bar 4, but the tail below, probably better off selling the close. And then, what about, let me see here, 15, low 2, probably you could sell below 15. 19 was an aggressive buy, but some traders will bet it's 2 legs down in a low of the day. I thought you could sell below bar 30, but be quick to manage it. The trade needs to go your way fairly quickly. And then, of course, 37, 38, 39, and then 40. These are all good stop orders, and then probably sell the close 40, 41, 42. But hard to sell here when you're possibly low in a trading range. Some traders will sell below 49, low 1, but again, it's aggressive. You know, you could be low in a trading range. And whenever the market has a surprise or low probability event, typically happens quickly and in a big way, and that's what bar 50 was. Bar 50 is probably sell to close. And then you could sell to close 51, 52, all the way down here. And as far as stop orders down here, maybe sell below 63, but you're getting really late in the sell-off and far from the moving average. The bar is fairly big, and we've been sideways for a lot of bars, and the reality is there's probably buyers below. As far as buying on a stop, I don't know. I would not. For limit orders today, I thought sellers above bar 6, buyers below bar 6, sellers above 13, buyers below 21, 22, expecting a second leg. This was strong enough for a second leg, buyers below, but never triggered. Here, strong enough breakout, probably sellers above 32, and there were. Micro channel, sellers above. Bad, high 1, sellers above. And all through here, sellers above, but only triggered down here. Down here, we went sideways, and we had sellers above 59, and then buyers below. It's a limit order market all the way through the close. So again, what I mean by limit order market is you have traders, you have bulls buying below bars and taking profits above, and you have bears selling above bars, taking profits below. If anyone has any questions, please feel free to leave them in the comments below. And if you have questions specific to the video, just leave a timestamp. That'll help me out, and I'll be happy to get back to you as soon as I can. All right. Hope everyone has a good rest of their night.